everybody. It's Friday, May 3rd, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here had July corn up 5.5 at 465 and a quarter. July soybeans were up 10 at 1209, and July Chicago wheat was up 13.5 at 617 and three quarters. This morning we had an export sales announcement of 122,000 soybeans to unknown destinations for the 23-24 marketing year. Also out earlier this morning were jobs data. Non-farm payrolls were up 175,000, which was a pretty drastic miss off of the estimate of 240,000. Unemployment rate up to 3.9%. They were looking for it to hold steady at around 3.8%. Outside markets actually had a positive reaction to the jobs data. Stock market rallied. That was up about 500, currently trading about 450 higher. Good morning, guys. It's Friday. We've got a little bit of excitement here on the heels of, a little bit of a weather discussion in South America, some of the technicals turning up. I think we'll throw it over to Justin for some initial thoughts here this morning and then work it around the room.
Yeah, thanks, Dan. Obviously, big volume yesterday. I think a lot of people kind of scratching their heads. Kind of started in the bean market. May beans at one point were up 40. May July spread got to almost flat. I think half cent carry, so up 12-13 cents on the day after big deliveries. So Ben, we talked about this. I mean, sometimes when you get big deliveries, it's a buy. But I think when you have moves like that, and we've been talking about just the powder keg and the volume that's in these markets now, anything can trigger these kind of buy events or sell events. And I think when you have big moves like this, we all try to find a reason. So there's been a lot of flooding in Rio Grande do Sul, in Brazil, right? So I mean, that is legitimate. There's been anywhere from 5 to 20 inches in the last week or so. So I mean, there is legitimate flooding, but by all accounts, they're anywhere from 60 to 80% harvested in that state, in that region. So you're talking about, there's 14% of the bean crop that's growing there. Let's call it 70% harvested. So you're talking about a few million tons of beans maybe being affected. Now I think it's probably more important with some of the corn that's being grown or some of those things. But either way, it triggered, I think the funds maybe were just too short and you started turning up the technicals. And when that happens, and you have some kind of a story to feed on, you get these kind of moves. So, it didn't expect it to happen yesterday, but we've been talking about this, right? The volatility, we're getting into May, we're just getting into the growing season. So we're going to have volatility in these markets. I mean, you look at the outside markets, look at what the stock markets are doing, look at the other outside markets, the softs markets, the energy markets, the dollar. I think there's just a lot of potential here for continued volatility. And this is good for the producer, right? So when you have, when you kind of use that volatility in your favor, we're getting close to some 2025 targets. We got filled on some resting soybean orders yesterday. So this is good for the grower. You just got to kind of keep your head about you and really think about where you need to make decisions if these markets continue. We're trading above some major moving averages. That was big areas yesterday of 480 December corn and 460 July. We're getting above those 100-day moving averages. So definitely some positives in our favor. We talked about this, if you were to run some more shorts and have a quick spike to, say 20, 30 cents higher from here, I think it's really important to make sure that you have orders in or, some things that you want to do, because it could happen quick and they could take it away quick too, the way these markets are trading right now.
That's a great point. Dustin, you talk a lot about, and we do in the war room, about plan A, plan B, and being prepared. And you're starting to get into potentially some plan A's for some guys this early in the season where, 3 to 4 months ago, it wasn't, maybe didn't feel like a reality. And now here we are,
Yeah, I think it all depends on, what what each grower, wants and needs for a risk profile. I do think the cost of production is still an issue. So if there are, I think for the average grower, you're going to see, not a clear path to profitability if you get sub trend line yields right now, right? Like most insurance policies will kick in after at least a 15% deductible for the federal policy. That's 85% policy. Even a 5% hit right now, this price may or may not make sense. So I think it's a lot of it for our side is a combination of like, plan A, plan B, but still keeping that yield and price relationship. If we have a disaster, if this is a La Nina year and this wet pattern turns to a dry pattern, and people are looking at, yield loss for a big portion of the Midwest, we're going to need to keep some sort of price connection for low yield, high price, right? As we always would. So unfortunately, it's not a one size fits all, discussion. It really depends on the individual, where their cost is, and what they're willing to give up for opportunity, by starting to make some decisions this early in the season. I will say we usually make seasonal highs sometime in May or June. Seasonals, can be counter seasonal though. In a lot of years where we don't make the high, then we make it later in the year, or we don't get the chance, like 2017, for example. We don't get much of a chance in those years. So it all boils down to what kind of risks can you afford to take on by not doing something to the downside. We talked before this, show started, and things turn out to be a good year. We can easily still pencil a $4 price or below at the end of the year. Just because we're starting to rally now doesn't mean that that's going to be the direction for the year. We still have to kind of hunker down and make sure that we're not in major financial trouble if that sub $4 price did come out at the end of the year.
Yeah, Dustin, I would agree. I think we're mentally, I think we should consider that we're in potentially a 2014 through 2019 timeframe where we have, these seasonal rallies that, drift lower into harvest. Where I think the 2020 to 2022 or 2023, I think that time frame's over. Personally, we still have some inflation. We have some exciting things that can get, nice spikes in the market. But I think you have to consider that we're back to kind of more normalized markets, even if they're at higher price levels. So maybe, what was $3 is now $3.60 or $4. But, to look at close to $5 corn, I think that's probably going to end up being a good sale, unless we have major problems, because we do have a lot of headwinds. So I'm friendly corn. I'm friendly some of these things, but you just got to keep that in mind with, we do have a lot of headwinds still globally, so hopefully we get some excitement, we get some volatility, we get a spike in prices, but, the overlying, global bearish fundamentals haven't gone away. It's just right now there's enough excitement to get, maybe force some shorts to cover, those kind of things. That's my opinion.
And Justin, you talked, you made mention of 25 earlier in your opening statements and stuff, and so you're looking out to 25. I mean, are you seeing, with the thoughts of sort of a readjustment in costs and in margins out to 25? I know it's trying to foreshadow, but from where we are today to that next crop year.
Yeah, like 25, we're trying to get some sales on. We're close to $5. We're trying to kind of get some premium type sales on just to get started. I hate to get too aggressive that far out when you don't know your expenses. You don't know, there's a lot of unknown factors. At some point when you're on, there's some price points where you just have to start a little bit. So we're not getting super aggressive, but we are starting.
Yep.
If we can get some sales out there and kind of get, some of the, 520, 530 type prices, we like that, but again, you can only do so much without knowing, all the variables, what interest rates are going to be, what inputs are going to be, those kinds of things. So, but
Yeah.
what we like about it too is that, now that the spreads have come in, we like it because we were at good carry, right? So we were at a 20+ cent carry to D's 24. So that was the highest price contract. So when you have big carries and you have a flat price rally, making some of those premium sales and getting a lot of time value for options and different things that we're doing makes a lot of sense. Because if you have a bull market, that contract, generally stops going up as much, and same with a bear market, it tends not to break as much. So if you can collect a lot of time value and get some premium, those are good forward type sales to do.
Yeah, that's good stuff. I mean, that's the dynamic piece that, could be the difference for a lot of these operations in terms of, squeezing out a tight margin as we go forward for the next couple of years, if what we're thinking is going to take place.
Yeah. And we, how we, how we operate too. And Dustin talks about this a lot. It's multi-year whole farm outlook, right? So we've been more aggressive on beans. For 24, for example, we've been aggressive on crop insurance. We look out to 25. So it's really just trying to evaluate the current situation you're in, what volatilities are, what prices are, what relationships are, and trying to think about the whole farm revenue and how to protect that multi-year. So it's you kind of gotta change with the situation, but right now we're beans. Personally, I think beans look pretty high priced relative to fundamentals at $12. I think you're going to look back and think that was a great sale, but we'll see. You could turn into a drought and you could look foolish for sure. But
yeah. Good morning to Nick out in the East. You're exactly right. I think it's more about being prepared, Nick, and you're certainly on the forefront of that. Ben, some thoughts from the East as we wrap up the week?
Yeah, just touching on, what Justin was saying. And, it's two thoughts there is a lot of times we can tend to hear what we want to hear, and we want to see some higher prices, obviously. But volatility can be volatility in both directions, right? We can shake people out up, we can shake them down. Markets are going to move and auction in both directions. But I do think that we've now created an environment where we've loosened it up a little bit. And yesterday we had what you would call a classic breakout, but we need to see some confirmation of that over the coming days. Doesn't mean we can't revisit that. And the other thing, I often get chided on here from some of these guys for being a grandpa in this chat room. But historically speaking, bear markets last longer than bull markets, right? You can go back and look at a corn chart going back to the 80s, whenever it may be. And typically you see bull markets last year and a half, 2.5 years. We were really blessed in the early 20s with a 3-year type of run. And bear markets just tend to last longer. It takes us a longer period of time to come out of that with just a burdensome supply. So, I would kind of keep that in mind too on this rally, and keep in mind, what is the amount that you're willing to risk should we see a really big crop and see $4 type of corn again. So, constructing a plan around that, I think is most important. The runaway market will take care of itself.
That's very good stuff. We got a couple minutes here before the open. Rylan, you want to give us a livestock wrap up for the week here?
Yeah, sure, Dan. Saw the market kind of come back here a little bit. The positive, or the negative test, I should say, rather, in the ground beef definitely kind of gave the prices a boost. A little bit of calm in the market. Just everybody was thrilled, to say the least, but not out of the woods, just because we're still testing. USDA still has to test muscle cuts. I think there's a lot more confidence that at this point they're going to see another negative test, just because it didn't show up in the grind. So we'll see, though. I mean, there's going to be more information about this. Cash market's still staying pretty strong here, and the big problem right now is beef weakening. So looks like the headwinds that we could see, there may be a little bit of concern about this jobs number on the longer term. So I think it's just something to keep an eye on right now. But it seemed like there was a little bit more confidence going into the end of the week that maybe we just got a little bit too panicky because of what these tests actually mean from the USDA. So more information to follow next week, but looks like cash is definitely at this point in the north shaping up way better than expected. And we're just waiting for the south to take place. So expecting kind of steady money down there, if not maybe even a little bit better.
Very good. Appreciate that. And we'll look forward to hearing more about that next week. It's Friday. As always, we wrap with Fun Fact Friday. Brian, see if you stay undefeated here.
All right, sounds good. Giddy up, Dan. It's the Derby edition of Fun Fact Friday. Tomorrow will be the 150th running of the Kentucky Derby. They have raised the purse to $5 million for the winner, so they will take home like a cool $3.1 million if they win the race tomorrow. Secretariat still holds the record for the fastest time, 1 minute 59 and 40 seconds, made back in 1973. 120,000 mint juleps will be consumed at the race on average. So I'm assuming a lot of money will be changing hands as well. So now these are only entertainment purposes only. So get your pencils and paper ready. 19 of the past winners, the horses started with the letter S. No horses with the letter starting with Q, X, or Y has ever won the race. And the posts 5 and 10 are the most winning posts that win the race. So all
you can't lose.
You can't lose. So now you know. But it's supposed to be a little bit of a wet track tomorrow. So look for a mutter.
Very good. Hope everybody has good luck. And no, that should be a lot of fun. Derby weekend's always a blast. Just came into the open here. We got July corn up 6 1/4, 465 3/4. July soybeans are up 9, 1208 is the last. In July, Chicago wheat up 13 1/2, 618 is the last. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate everybody's thoughts and comments this week. Good discussion. Hope everybody has a great weekend, and we look forward to talking to you next week.
Thanks, Dan.